So what is DeFi? For starters, it stands for Decentralized Finance. Now imagine if you had to take a loan from bank today, you have to have an asset to present as a collateral, right? Then it is on the bank, which is a central authority in this case, to provide you with that loan or not. Now bank is in the middle of the process and it controls the process. DeFi comes in and disrupts this system. So how it works? If you want a loan, you get one instantly by simply putting cryptocurrency up as a collateral. And in some cases, you don't even need to give something as collateral. Now this creates a smart contract that finds your money from other people who've made a pool of funds available on the blockchain. So DeFi is a system that helps you use financial products on public blockchain networks in a decentralized way, which means not regulated by any intermediary. Now in financial products, it's not only loans, but savings, trading, and even insurance. There are multiple financial products involved here in DeFi. Now most DeFi systems are built on Ethereum, but there are now several other public blockchain networks like Solana, Terra, Avalanche, and of course the India-based Polygon, on which these financial applications are built. So basics are clear, but how does this really function? How is DeFi really executed? So essentially it has two tools, dApps and smart contract. Remember I was talking about some cool acronyms, so dApps is one of those. Now dApps stand for Decentralized App. These are the applications built on the public blockchain on which all these financial functions are carried out. And the essence of this app is clear, decentralized apps, dApps. Then you have smart contract, which is another tool. Now, this is how all the transactions get executed automatically, without the middleman that we spoke of. These are essentially code-based contracts that contain the terms of agreement between the lender and the borrower. Now, words used to describe DeFi seem to be the same words that are used for cryptocurrency, which is decentralized, right? There is no intermediary. Then they are global, no regulatory authority, peer-to-peer. So what's the difference here? The number one difference is programmable. Well, Bitcoin was in a way the first DeFi application, but blockchains like Ethereum build on this. It's not just digital money, it's programmable. So you can go beyond only storing and sending the value. And I think this is the best. I mean, if you have to explain it in a better way, then you can do it in words of Camila Russo, the founder of a crypto news service, that Bitcoin wanted to be peer-to-peer money, whereas Ethereum wanted to be peer-to-peer everything. So that's essentially the difference there. Now we've understood what DeFi is, but what all can you really do with DeFi? First is send and stream money around the globe. You do transaction, send someone their salary by the second, giving them access to their money whenever they need it. Hence, we use the term streaming money, how you stream videos as well. Now, borrow funds with and without collateral. You can also borrow funds via flash loans, although that gets a bit too technical, so we won't go there for now. Also, it is yet experimental form of decentralized lending, but flash loans is also an interesting aspect of this new stream which we are talking about, DeFi. Now you can earn interest on your crypto by lending it and see your funds grow in real time and save huge. And then moving ahead, you can buy insurance. There are insurance dApps like Nexus Mutual, Etherisk that provide insurance the decentralized way. That was an explainer, a quick and a brief one about DeFi. But now let's go to our experts to understand the risks and rewards of DeFi. We have with us Rohas Nagpal, who's Chief Blockchain Architect of Wrapped Asset Project, and Ritham Gupta, CEO of DeFi 11. Now we'll understand the immediate rewards first. Ritham, I want to come to you first. What are the immediate rewards or let's say advantages you see of DeFi?
Yes, Arun. So I'll say everything is immediate over here in DeFi. So when we switch to the decentralized finance from the conventional financial systems, everything becomes, first of all, quick compared to the conventional systems, and second of all, decentralized without the control or without the monopoly of any central authority.
Right.
In terms of rewards, or I'll say the immediate getaways that we can take away from DeFi, is that you can do any possible financial operation within the blink of an eye, I'll say, or within few seconds, depending upon which platform are you working on or whatsoever. That's, I mean, not going into the technicalities, but then anything. Let's say you want to get a loan. Let's say you want to lend something, borrow something, to do a quick transaction between your friends.
Sure.
Everything is just quick and easy.
Okay, so speed is, I think, the biggest reward pointed out by you. And I also want to quickly go to Rohas here. What is the immediate reward you see here in DeFi, Rohas?
Sure. So I think one of the best is that as an individual, you have total control over your funds. Your private key has to be used to move your money anywhere. But in the conventional world, that is not the case. Our money is lying in private databases of banks and other institutes, because of which when it needs to move, there is an element of cost and friction and time to it. But in DeFi, it's quick. You control it, so it's very decentralized. Your private key is needed for that to move. Manual processes are absolutely reduced. So I would say those are some of the best advantages.
Right. So we're discussing finance here, right? Which in a way we are discussing money, and money comes with its risks as well. Now let's move on to the risk part of it. And experts point out there are many risks as well involved in this stream, which we call DeFi. So Rhythm, first to you, what is the immediate risk you see or witness?
I'll say lack of awareness is the biggest risk and can be a big point in getting the entire system collapsing. People not being aware, not realizing that money is being involved or how the cons can come in. They have to, first of all, get some education involved, understand that what they are dealing with, and make sure that they don't lose out on any of the financial matters or the actual money being involved over there. So lack of awareness is one of the risks, and I'll say that can lead to loss of a lot of funds. That can be one of the biggest things, I'll say.
So do your thorough research, and of course you have a show like this which is called Coffee and Crypto, where you get all the explainers and also information as well. Now Rohas, I remember we spoke about this briefly before the show. I want you to dive deep into the risk factors here involved in DeFi.
Sure. So one of the major ones could be you need to be quite tech savvy to use this. So when we use our normal bank accounts, we have a mobile app. Suppose we delete that app, nothing happens. We can just reinstall the app because the bank is a third-party intermediary actually holding your money. But if you end up deleting your crypto wallets without having backed up the key, your money is gone forever. And I'm a classic example of that. I told you many years ago, I deleted a lot of my Bitcoins because I never thought they would become valuable. But unfortunately, there is no way for me to recover them anymore. And for an ordinary person, that can be quite difficult, managing so many addresses along with the private keys, the seed phrases. So I would say the biggest problem, and that is standing in the way of the growth of crypto as a whole and DeFi in particular, is this level of tech savviness and the risk of losing your keys. I would say that's the number one problem.
I mean, of course, everybody swear by blockchain when it comes to security, but then, there can be scams. There can be some platforms which can portray themselves as authentic, but they can actually con you in a way that you lose all your money. So that's the biggest risk here. But now, Rhythm, of course, if we talk about a situation about loan here, when you go take a loan via bank has a way to trace you back. But if I'm lending my money on blockchain, how do I trace it? I mean, if I was to lose all that money, where do I go?
That's one of the other problems that I would say is there. However, people are trying solving that, but that's an inherent property of blockchain. That's called pseudo-anonymity. You get an anonymous status, but with, I'll say, a pseudo tag wherein you can be traced by the address that you are holding, but no one knows who you are. So that's the major problem that people have been trying solving since years, and that's where the government is also afraid of, all the talks about regulations, bans, and all the thing that has been coming into picture just because this pseudo-anonymity needs to be worked upon. So that is where I guess we cannot really go to anyone in particular to trace who that individual is. We can trace, however, where that came from. This address made how many transactions and where the funds came to this address, which addresses had funds from this address, but then you cannot really trace the individual. one thing that can be done, and I mean, that's kind of like a balanced regulation coming in, would be KYC, mapping your identity with that address so that the pseudo anonymity can be reduced a bit more towards centralization, but then eventually solving some of the major problems.
Okay, Rohas, if a legislation was to come, as of course we know, we as a country are in a process of bringing regulation or legislation linked to cryptocurrency at the moment. But if a legislation was to come, do you think DeFi would come up with a lot of rewards and it can be regulated? How, I mean, we talk about regular cryptocurrency.
Sure. So I always prefer not to use the word cryptocurrency, but to use the word crypto asset, because there are 11 categories of cryptos, some of which are medium of exchange, let's say like a Bitcoin, but then you also have NFTs, which are completely different in nature. So I'm hoping that when the government does come out with this legislation, it would be functional, which means we would not try to regulate all cryptos as the same, but we would try to regulate each category of crypto depending upon what it does. So some may come under the purview of the securities regulator because they are security tokens. Some may come under the Reserve Bank because they are trying to do something which is relating to the money system. So I hope that the regulation is functional, depending upon what the crypto does, rather than being generic based on the fact that all of them are running on a blockchain. So that's my hope.
Sure. Thank you so very much, both of us, for joining us for this conversation.